38, 39, 40. Oh, hey, didn't see you there. Today, we're going to talk about the barbell investment strategy. Stay tuned. Oh, yeah.
Hey everybody, welcome back to WhiteBoard Finance. I'm going to curl this 5-pound barbell during this entire video using my left arm. So in today's video, we're going to talk about the barbell strategy and how it applies to stocks and personal finance. I'm also going to put my money where my mouth is and make a live investment in the second half of this video by applying this barbell strategy. Hint, this actually applies to the riskier side of the barbell, which you'll learn in today's video. Stay tuned. Okay, so what is the barbell strategy? The barbell strategy is commonly used for fixed income investing, such as bond investing, more often than it is used for stocks, but I like the overall philosophy and how it applies to life, not just investing. In a nutshell, it pairs high risk and high return investments with lower risk, lower return investments, which ultimately allows you to achieve a balance between risk and reward. The entire purpose of the barbell strategy is to avoid the middle of the road options. So the philosophy behind this is that you're going to get outsized returns with the high risk investments while maintaining almost guaranteed lower risk returns on the other side of the barbell. So let me show you a visual right here. Okay, so let's take an example portfolio. So for most investors, the goal is to create a long-term portfolio that allows you to achieve maximum returns given that the amount of risk that you can tolerate. So I personally call this philosophy my SWAN portfolio, AKA my sleep well at night portfolio. This also depends on what cycle of life you're in or your overall risk tolerance in general. You could be a young professional who has their whole life in front of them who can handle more risk, or if you're a retiree, you obviously want to be more conservative in your old age because you have less time to make up for any mistakes or market corrections. So let's take a look at a potential barbell strategy for a young professional. So over here, you can see on the left-hand side, this is your conservative side of the barbell. On this side right here, this is your more risky, huge upside, huge asymmetric bet side of the portfolio. So on this left side, you have index funds, right? These are pretty simple index funds. We all know what they are, index funds and ETFs. On this side, you have cash. You can have T-bills. These almost pay a risk-free rate of return. It's backed by the government. Gold, precious metals, and then also some retirement money. So maybe like a company match or something. This is a lot harder than it looks, especially on my left hand. I may have to switch here pretty soon. On the riskier side, we have things like startups. So I label these like startup A, B, C, D, getting exposure to different pre-IPO companies. You can have PE, which is private equity. You can have venture money, which is venture capital. You can have crypto, for example. I don't recommend investing in 99.9% of crypto other than Bitcoin. But that's pretty much what I have on this side. So before we get into explaining what this is, the middle of the road, I actually want to show you today's sponsor, which is Fundrise, and I'm going to show you actually making an investment of $1,000 into their venture fund. Let me show you real quick on my phone. So putting my money where my mouth is, I'm actually going to buy $1,000 worth of Fundrise's venture fund. I will describe in the personal finance section of this barbell later on why that is. But I'm gonna record my screen on my phone here. That way it makes it easier for you to see. I'll probably leave it up on this side of the screen or actually just make it really big so you can see. So this is my Fundrise account. I've been investing with them since September of 2019. They make it super easy for anyone to invest in alternative asset classes. This could be real estate, could be private equity, could be their venture fund. There's a bunch of different options here. But I'll click on their innovation fund. And that way you can see that they build a portfolio of private pre-IPO blue chip companies. And a lot of these are leading the AI revolution. My last video was about how to invest in AI for beginners. And then we also talked about putting this on the risky side of the barbell. So traditionally these investments, as you can see here with venture capital in the top right-hand side of the screen, they've been out of reach for small investors, right? It's not like everyone has a VC buddy or who's an accredited investor who has access to this stuff. Venture capitalists, they make these deals with early stage companies behind closed doors. And while everyone was kind of stuck in the middle of the road, which we're going to talk about here, I want to show you how I'm going to invest in this as well because I want to place this on the risky side of my barbell. So I'm clicking here on $1,000. I'm going to click continue. There's my source of funding. I'll probably blank that out. Agree to all this stuff and place the order. So thank you for your order. Hit the transactions page. You can see that I just invested $1,000 into that. If you want exposure to stuff like this, check out Fundrise's Innovation Fund. My link will be in the description down below. Thank you. Okay, so what is considered medium risk? So this area right here is considered to be no man's land. So in my opinion, medium risk is actually just investing in established individual stocks. So I know this may take some people off guard because equities are obviously considered a risk-on asset. But the reason I'm classifying individual stocks as medium and not high risk is because I'm assuming that you're going to buy stocks that have already been established and on the market, and you're not going to be trading, options against them. You're not going to be doing all these crazy exotic investment strategies for 99% of you watching this video. So do I recommend the average investor trade options other than cash secured puts or covered calls? Obviously not. That kind of defeats the whole philosophy of this channel. But what's the difference between investing in a venture startup, kind of like I did with Fundrise, or a startup company, as I mentioned earlier, with A, B, C, and D over here? Well, the returns justify the reward. That's the whole point. Remember, as investors, we're compensated for the amount of risk we take on. So something like a T-bill, for example, is obviously going to be lower risk than something like, a startup company. So who do you think got more rich? An early employee of Google who got stock options, or someone who bought the stock a month ago? Obviously, the employee had much bigger upside because it was at a riskier proposition at the time, as opposed to Google, who is now massively established in the marketplace. And by Google, I mean Alphabet. So does that make sense? So the other stocks that fall into the risky side are IPOs, small biotech stocks waiting for a patent, and similar situations like that, but never blue chip stocks or stocks that are already established. So in the introduction of this video, I told you that I was going to show you how this applies to stocks and both personal finance. Let's talk about the personal finance barbell. On the conservative side, my wife and I personally have no debt. We have a high savings rate, we have multiple income sources, and we have a 12-month emergency fund. On the aggressive side of things, most of my net worth outside the equity in my paid off home is in index funds. We have index funds, Bitcoin, venture capital, and my own business, which I invest my money back into. So some of these are obviously riskier than others, but I also have 2 kids to feed, so I can't go as crazy as someone in their early 20s, for example. This is why I stick to index funds and ETFs primarily. I will say that Bitcoin is probably the biggest asymmetric bet that you can make, especially before the 2024 halving, but that's a topic for another day. Let's stay tuned for my thoughts at the end of the video. Okay, so my thoughts as always, don't invest in just any startup. Okay, that's bullet point number 1. So if your buddy comes to you and he has some crazy far-fetched idea, 90% of the time, these ideas are not gonna work out. 95% of the time, they're gonna fail within 5 years. 99% of the time, they're not gonna become a billion-dollar unicorn, so take all that with a grain of salt. When I say startups, try to get involved with entrepreneurial groups in your area and find people who have been proven jockeys, right? You have the horse and the jockey. The horse is the product, the jockey is the person running the business. So run with the jockey or bet on a jockey that's already won, okay? They have a historic track record of success. Index funds, I recommend for 99% of the people watching this channel, myself included. Most of us are not genius stock pickers. I do allocate some portion of my portfolio for individual stocks, but that's more for the outsized barbell strategy. It's more for fun, more for risk, right? So index funds are probably going to be the way to go for 99% of people. This thing is getting so heavy. And then age and risk. Don't forget your age or risk tolerance, okay? It all depends on how much risk you're willing to take on. But remember, as I mentioned earlier, the amount of risk that we take on is the amount of reward we should get. So that always has to be in balance. Consider your age, consider your family situation, all that good stuff. All right, guys, I'm gonna switch my arm here. Oh, that's so much easier. Look at this thing. This thing's nothing. It's like a toy. Also, if you haven't checked out WhiteBoard Finance University, the group is growing like crazy. We just had multiple people on our private live stream on Wednesday. Unbelievable group. Everyone's super intelligent, super focused, super disciplined to improve their wealth. What we teach is the 4 pillars of wealth. It's essentially money management, increasing your income. You're not going to save your way by saving $3 coffees, right? You're not going to save your way to wealth. And then we have the 2 paths of stock market and real estate investing, all taught by chartered financial analysts, professionals, and also actual real estate investors with 500 units. So this is not just some random $5 a month Discord, if you will. Nothing against those groups, but this is much more in depth. So I'll give you a discount code in this video. Let's use Barbell20. Barbell20 for 20% off. All right, thank you so much for watching. Have a prosperous day. Hey bro, can I get a spot? Okay, I'm gonna do a military press. You got me? Okay, it's a lot of weight. Let's go. One. Let's go, baby. Whiteboard fitness.